Treasury Secretary Bessent's surprise buyback move in thinly traded long bonds could steady long-term yields, giving Canadian investors holding dividend stocks or bonds a clearer read on rate-sensitive holdings this month. This is Modern Investing Techniques, episode 145. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,641, down 0.9%. The Nasdaq Composite finished at 26,067, down 1%. The TSX Composite ended at 36,365, down 0.1%. Financials and technology led declines, while energy showed relative resilience. Bessent described core inflation as reassuring, with wage pressures easing outside energy. The next Bank of Canada decision remains weeks away. About 14 days ago, we picked MU on a valuation screen that limited damage during sector selling, closing up 5.12%. That outcome reminds us that depressed multiples can buffer rotation pressure when volume confirms the move. Treasury buybacks function as direct market intervention where the government purchases its own longer-dated bonds to improve liquidity. Bessent tied the move explicitly to thin trading in the 30-year sector during August corporate issuance. The announcement came outside the usual quarterly refunding calendar. For Canadian investors, this matters because U.S. long bond yields influence domestic mortgage rates and the relative attractiveness of dividend equities versus fixed income. Implementation starts with watching the 30-year Treasury yield for compression after the buyback window opens. Rotate a small sleeve of TFSA holdings into rate-sensitive names only if the yield drop exceeds 10 basis points on the day. The approach worked best in 2011 and 2012 when Operation Twist flattened the curve and lifted dividend aristocrats. The risk today is that any fiscal consolidation plan announced next week could offset the liquidity signal if deficit reduction looks credible. This trade demonstrates how to apply a simple valuation screen to a single-name Canadian financial without assuming sector leadership. It also shows the discipline of setting an observable invalidation level tied to a moving average rather than discretionary judgment. Disclaimer: this is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's pick is EQB.to, EQB Incorporated. The strategy is a valuation screen on a Canadian bank trading at a discount to sector peers despite a stable growth backdrop. The hold period is 5 sessions from entry. Invalidation occurs if EQB.to closes below its 50-day moving average on daily volume above the 20-day average. The catalyst is a supportive Canadian banking backdrop for alternative lenders with room for multiple expansion if growth holds. The technical setup shows the stock below recent highs with RSI near 45 on the daily chart. Risk assessment sets the stop 6% below entry to limit loss if broader financials rotate lower on rate volatility. The target is +3 to +6% over the 5-session window if the sector stabilizes. Confidence is medium because the valuation discount is clear, but sector rotation signals remain mixed after recent financial underperformance. We will track this simulated position through Friday and evaluate the outcome then. Yesterday's trade review shows no newly closed trades since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation. There is no new realized result to report today. The Interactive Brokers TWS scanner filters for TSX and NYSE names meeting custom valuation and volume criteria in real time. Canadian investors can screen for the exact parameters used in today's EQB example without manual spreadsheet work. The scanner updates continuously during market hours and exports directly to order tickets. Wealthsimple trade watch lists with alerts let users set price and volume alerts on Canadian dividend names like Alkane Resources. You receive a notification the moment a buyback or maiden dividend announcement moves the stock. No commissions apply on Canadian stocks, and alerts are available on the free tier. Alkane Resources declared its maiden fully franked dividend alongside an on-market share buyback. The move follows a 590% profit surge at the Australian gold and copper producer. Add ALK on the TSX to a dividend watch list and review the fully franked yield once the ex-dividend date is confirmed. DMG Blockchain set its Q3 earnings date for August 27th before the open. The vertically integrated digital asset company gives investors a fixed window to prepare position sizing around crypto infrastructure exposure. Set a price alert on DMGGF 2 sessions before the release and review the prior quarter's revenue trend for context. Brookfield Renewable priced 750 million Canadian dollars in green bonds. The issuance adds long-term capital at the medium-term note level and expands capacity for renewable projects. Compare the new series yield against existing BEP.UN holdings before deciding on any rebalancing within the utility sleeve. Cascades continues to expand its domestic market share in sustainable packaging. Review CAS.TO volume on the next session above the 20-day average before considering any small TFSA addition. The show used to quote a cumulative alpha figure across roughly 45 trades. That figure blended trades whose entry and exit prices could not be tied back to the actual sessions the trade was held. From August 18, 2026, every pick is scored under one written rulebook. Entry occurs at the first session open on or after the pick. Exit occurs at the stop or at the fixed horizon. One position, $1,000, no discretionary exits. The rules and the full trade-by-trade ledger are published for anyone to check. Portfolio performance shows 51 total trades, a 55% win rate, and cumulative P&L of $314.12. Matched window alpha versus NASDAQ stands at negative 1.69% across one rules-based trade. This record began 2026-08-18 under the published rules. Earlier trades are history and are not blended into it. Too few trades to call an edge. Average return per trade is plus 0.62%. Best trade plus 20.11%. Worst trade negative 11.80%. Current streak is one loss. Imagine you hold a Canadian bond ETF that tracks US Treasuries and you see the 30-year yield drop 12 basis points the morning after Bessent's announcement. Your order filled at the previous close, yet the ETF's net asset value adjusted only partway because the underlying bonds traded in a thin after-hours window with wide spreads. When the Treasury buys X billion dollars in a specific maturity, it removes supply from that segment. Prices move up and yields move down in a mechanical way that does not require a Fed rate cut. Most retail investors miss that the effect is localized to the purchased maturities and can reverse quickly once the program size is fully priced in. Professionals always check the Treasury's announced purchase sizes and the exact maturities before assuming a broad rate rally. The misconception to avoid is treating every Treasury announcement as a permanent policy shift. Size any rotation into rate-sensitive holdings only after the first full session confirms the yield move with above-average volume. Before we wrap, check EQB.TO distance to the 50-day moving average and the 20-day average volume. Write down the exact percentage buffer you would require before adding it to your watch list. That's it for today's modern investing techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. And before you go, this show is part of the Nara Network, a family of daily podcasts on tech, science, and markets. Each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. SpaceX Daily, the daily companion for following SpaceX as a public company, from Starship to the stock ticker. Find every show free at naranetwork.com. And on the website, every episode's visuals live in our free image gallery at naranetwork.com gallery. Royalty-free under Creative Commons. Download with attribution. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? restless? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't last?